A trending market is like a speeding bus. Just as you would wait for a bus to slow down or completely stop before you board, with a trending market, you wouldn't just enter trades anywhere. Instead, you would wait for the trend to slow down before entering your trade. This slowing down of a trending market is often referred to as a retracement, or more specifically, a pullback. However, identifying pullbacks in the market is always easier said than done. It's not always straightforward to determine the end of a pullback and the beginning of a trend continuation. That is why in this video, we're going to explore a unique trading tool known as the Z-Score Probability Indicator. When used alongside other confluence factors, this indicator can help us anticipate market pullbacks before they even happen. Let's get into it. Now, as mentioned earlier, this indicator is called Z-Score Probability Indicator. To add it to our chart, we're going to click on Indicators, then type in Z-Score Probability. This one by Steve Steves. The Z-Score Probability Indicator is a statistical tool used in trading and is based on the concepts of Z-Score. Now, you may be thinking,
but what exactly is Z-Score?
Well, Z-Score is basically a statistical measurement that describes a values relationship to the mean of a group of values. This indicator uses both the standard deviation and the mean of a dataset to provide a Z-score, which is then translated into a probability. Now, this trading tool is made up of several different components. This red and green histogram is called the Z-score histogram. When it's colored red, it indicates a bearish market momentum, and when it's colored green, it indicates a bullish market momentum. This white line right here is called the ZSMA, which is just a simple moving average plotted on top of the Z-score indicator. When the Z-score histogram is colored green and goes above the moving average, that indicates a strong bullish momentum. And when it's colored green and below the moving average, that indicates a weakening of that bullish momentum or a pullback in the market. And of course, it's going to be the opposite in a bearish market. Next, we have these horizontal lines right here that correspond to the scale values of 0, 1, 2, and 3, as well as -1, -2, and -3. These are basically the standard deviations. These numbers indicate the price point that GBP/JPY will need to achieve in order to get to these specific standard deviations. So for example, in order for it to get to the third standard deviation, it would need to get to the price level of 170.21, which is just a tiny bit higher than where it's currently at. This table contains the Z-score, or the standard deviations, and down here we have the probabilities of each standard deviation being achieved or not being achieved. So for example, suppose the price of GBP/JPY is increasing and pushes into the 2 to 3 Z-score range. In that case, the indicator can help estimate the price level corresponding to a retracement to a Z-score of 2 and the probability of this retracement happening. So as we can see here, GBP/JPY pushed into a Z-score of 2.453. Now, according to this indicator, the probability of GBP/JPY coming back down to the second Z-score is 0.98 or 98%. And for this to happen, GBP/JPY will need to come back down to this exact price point as indicated by the indicator. And we can apply the same method for any other Z-score. So for example, if you wanted to know what the chance is that the price will get to the -1 Z-score, you just look at this number, which is 0.16. So there is only a 16% chance that the price will get to the -1 Z-score. And in order to do that, the price will need to come back down to this exact price point. Pretty cool, right? Bear in mind that these probabilities pertain to retracements rather than continued price movements. So for example here, the exact Z-score of GBP/JPY is 2.453. For any Z-score lower than 2.453, the indicator provides the probability of the price retracing to that level. However, for any Z-scores higher than 2.453, the indicator predicts the likelihood of the price failing to reach that point. As an example, consider a Z-score of 3. This reflects a continued price movement, not a retracement. This value doesn't represent the likelihood that the price will reach the third Z-score, but rather the probability that the price will not get there. Essentially, this can be interpreted to mean that 98% of data points fall below a z-score of 3, or that there is a 98% chance that the price will not reach that level. The input settings of this indicator allows us to change the lookback length, the SMA length, as well as other options. For this video, we're gonna keep everything else at default, but we're gonna disable the z-table and the SMA. Then on the Style tab, we're gonna disable the Labels option and then click OK. Now,
How are we gonna be using this indicator to trade?
well, it's really simple. Every time the price pushes into a z-score lower than -3, we're gonna wait for it to start coming back up to indicate a bullish retracement. Then we're gonna enter a long trade. On the other hand, every time the price pushes to a z-score that's higher than 3, we're gonna wait for it to start coming back down to indicate a bearish retracement, and then we're gonna enter a short trade. Now let's add 2 extra confirmation indicators to create a simple yet powerful trading strategy. But before we do that, if you're looking for a forex broker with some of the lowest commissions and spreads in the market, then check out HenkoTrade. I personally use them on a daily basis. As you can see here, this is my trading history. I mainly scalp gold. And up here, you can see that it's actually a live account. If you're like me and you love having a high leverage on your trading account, then you're in luck because HenkoTrade offers a maximum leverage of 1 to 500. And if that's not enough, they're also going to give you a 100% bonus for all your deposits up to $25,000. So if you deposit, say, $500, they're going to give you a bonus of $500, so you'll have $1,000 to trade with. To access the bonus as well as all the other perks, sign up to HenkoTrade using the link in the video description. Back to the video. Open the indicator search tab and type in market bias. Select this one by Professor X. Next, type in support resistance channels. This one by Lonesome the Blue. Double-click on the market bias indicator, and on the inputs tab, change the length to 150 and change the smoothing to 50. Then on the Style tab, disable this first option. This indicator is going to be used for trend confirmations. The support and resistance indicator is going to be used for exactly that, to identify support and resistance levels. And yes, we're going to stick to its default settings. Now, how do we trade using this strategy? Well, let me show you. To take a long trade, first, the trend ribbon of the market bias indicator should be colored dark green to indicate a pullback in a bullish trend. Second, we want the z-score histogram to go below the -3 z-score, so basically below this lower red zone. This indicates that the price is further away from the mean or the average, which is a good thing for us because if it comes back up to the mean, that would be an opportunity for us to make some profit. The third condition is that we want the market to print a green bullish candle with a z-score that is higher than that of the current candle. So this is the z-score of the current candle. If the next candle's z-score happens to be greater than this, then it's a valid setup. Having the current candle's z-score higher than that of the previous candle indicates the beginning of this bullish trend continuation and an end of this pullback. This becomes our potential entry candle. Last but not least, we want that potential entry candle to be rejecting off of a support level. To confirm that, we just activate the support resistance indicator. And as you can see here, there is this green level right here which indicates a support level and the price is rejecting from it. This is going to increase the probability of the price going in the direction of our trade. All our entry conditions are met on this candle, so we're going to enter a long trade here. The stop loss is going to be set below the most recent swing low. For the take profit, we're going to set it at 2.5 times the risk. We let the trade run and take profit. For short trades, we're just going to do the opposite. So first, the trend ribbon of the market bias indicator should be colored dark red to indicate a pullback in a bearish trend. Second, we want the z-score histogram to go above the third upper z-score, so basically above this upper red zone. This indicates that the price is further away from its mean or the average, which is going to be a good thing for us because if the price goes back to the mean, that would be an opportunity for us to make some profit.
Here comes the money.
The third condition is that we want the market to print a red bearish candle with a z-score that is lower than that of the current candle. So this is the z-score of the current candle. If the next candle's z-score happens to be less than this, then it's a valid setup. Having the current candle's z-score higher than that of the previous candle indicates the beginning of this bearish trend continuation and an end of this pullback. This becomes our potential entry candle. Last but not least, we want that potential entry candle to be rejecting off of a resistance level. To confirm that, we just activate the support resistance indicator. And as you can see here, there is this red level right here which indicates a resistance level and the price is rejecting from it. This is going to increase the probability of the price going in the direction of our trade. All our entry conditions are met on this candle, so we're going to enter a short trade here. The stop loss is going to be set above the most recent swing high. And for the take profit, we're going to set it at 2.5 times the risk. We let the trade run and take profit. This is just one of the many strategies that you can do using the z-score probability indicator. Go ahead and take a look at this awesome tool and see what other strategies you can come up with. If you have any questions about this specific strategy, let us know in the comment section below. That's been it for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.